Hey guys, so I am doing this podcast episode with Ken Davenport, who is an expert in waterfront and cottage property. Put a thing out on Twitter a couple of weeks ago, looking for an agent who had access to the Barrie real estate board to help me with some research in regards to. I am a little bit worried about a liquidity crisis forming in the cottage market, not today, but in the 1 to 2 to maybe even 5 years, depending on how long it takes for us to kind of get back to a new normal post-COVID. And so him and I are going to be doing some research. So this will be a little bit of an interesting series because you're sort of going to watch live how we formulate an investment thesis, and then, or maybe not an investment thesis, some sort of thesis around economic analysis, and then sort of put it together, and then we'll have all of the supporting documentation, we'll start to release as maybe like a content series or a report available for people. So stay tuned. I hope you enjoy it.
Weekend?
Yeah. Nice day. A lot of people coming up to look at the leaves and whatever, which is funny. I've seen like a bunch of people just taking pictures on the side of the road.
Mark is doing well. We're
crazy. Actually, Friday, Saturday, yesterday, those were the 2 busiest days of the year I've ever had. I think I put out 8 offers in the past 48.
Yeah.
And
I heard of
5% sticking rate. So it's tough. It's a lot of work right now, right?
Well, I heard of one. This is in Barrie, so it wasn't waterfront, but a couple of days ago, 17 offers on a place.
Yeah.
And half $500,000, 550 property. So it's we don't tend to get stuff usually at that kind of level. Like you get into double digits, it's been pretty rare over the years.
Yeah. Barrie's going crazy though, because it's got that urban, like, you still have a functioning city. There's a great employment market. You're close to Toronto. Like if you're thinking, okay, a lot of these buyers are people running away from the city of Toronto, Barrie is a pretty logical place for them to go, right?
Yeah. I mean, we still got our own COVID cases, and there's still, urban stuff, but it's, 150,000 people, so it's a very different ballgame, the city proper. So.
For sure. I totally agree. And I think that the investment prospects look really good in Barrie. Like a lot of the developers I was working with in the past year or so, a lot of them want to buy stuff up in Barrie. The municipality is super development forward. At least by comparison to most other like small municipalities. So there's a lot of, I don't know. I mean, it seems like they've got a lot going for them right now.
Yeah, I think if you meet the right criteria, you definitely can sort of get in there. And they're definitely they're big growth plans over the next 20 years, especially in the South End. So looking to have a lot more people living here.
Yeah, for sure. Could you, are you okay to start off with a brief introduction, just so for those people who don't know you?
Okay. Sure. My name is Ken Davenport. I work for Sutton Group Incentive Realty out of Barrie. And Sutton is the second biggest Sutton franchise in Canada. We have, I think, about 8 offices now and 180, 190 realtors. So we're, Barrie's the center, but it's Innisfil, Aurelia, we're up in Muskokas, Collingwood, a number of different places, or Alliston, a number of different places. A lot of stuff right around this kind of thing, other than Wasaga Beach. That's a different franchise. But we're Bill Kindu's a broker, has been in here for a long time and doing, great guy. So a great group of people. Yeah. Personally, I've been in the real estate business since 2007. I moved to Barrie in 2006. Used to live in Mississauga for 9 years before that, and grew up in Etobicoke. So I spent most of my life in the GTA, and had a young family. House was getting a little small, so we took the plunge and moved north.
Right.
And haven't regretted it. Great little place to live. Previous to being in real estate, I was in banking for a couple of decades, actually going back to the 80s.
Right.
So I was involved in a lot of stuff in the sort of cash management and product management, head office stuff mostly. So a lot of business to business dealings, a little bit of stuff on the mortgage side.
Right.
So I'm familiar with some of those things, but big real estate flip in 2007. So
right.
I do a lot of stuff locally, but our markets. I mean, we're licensed across the province, but done stuff in Bracebridge and Gravenhurst and Midland and Aurelia and Point South, even as far as sort of Kingston.
Right.
Mostly residential, some commercial.
Right.
That's the gist of it.
Good. I guess, did your background in banking give you that sort of analytical perspective? Because I know you've been doing like a lot of really thorough research on the waterfront product type.
Thank you.
I'm curious.
Yeah, I've done, I think, a lot of, it's sort of a natural thing for me. Some of it's through training and things like that. I also, I have an MBA as well.
There you go. That answers it.
So that's part of it. I think that's part of where it comes from it's natural. Part of it's just, even before I entered the business, I sort of sat down and did a lot of research and tried to figure out, sort of what was going on. This is way back in the, a different era. Barrie was back in 2006, fast growing community in Canada back then, and there's a lot of stuff happening.
Yeah.
So I did a lot of stuff about the real estate industry as well as the community, and then sort of picked it up from there. I've got a not quite monthly, but every month or two, I send off a newsletter to 250 odd people.
Yeah.
That covers off mostly, it's very centric, but there's a lot of looking at some of the other stuff that's going on in the lending markets, and a lot of the GTA kind of influence. Some of the stuff coming out of New York, we talked a little bit offline. So that's a lot of where I think my kind of background is, and a good understanding of what's taking place out there.
Yeah, for sure. Cool. So on that topic, in regards to the waterfront stuff, what could you give me like just a summary of the trends that you're seeing and how you would generally describe what's going on in the market and whether or not it's like, to me, this is a very, very standout phenomenon that we're seeing as a result of COVID and probably this staycation, impulse buying and whatever, but I'd love to hear your perspective on how you describe the general trend.
Okay, so first of all, when I'm talking waterfront, it's not so much looking at condos in Muskoka, cottages in Muskoka.
Right.
The research that I've done recently is focused on Lake Simcoe and Lake Couchiching because I'm working with some clients and that kind of stuff. And it's mostly almost all year-round residences. There's a few sort of places that people are using as cottages. But it's waterfront stuff where it's on the lake, where people are able to live year round, and most of them do, and go about their lives. So what I'm basically seeing is, with COVID, with low interest rates, with work from home, a whole bunch of other things, I think are combining here to drive a bunch of people north.
Yeah.
It's across the spectrum, and I think to the outskirts too. So the waterfront sales are basically, the market that I'm looking at is covering Ramera, Georgina, Barrie, Innisfil, Oro-Medonte, Severn, Rock. So basically around those communities. And so what I'm basically seeing is the numbers have pretty well doubled from last year. I think so far we're like 199 sales versus 100 last year at this point. And this is crossing the gamut. I think the most expensive property I've looked at is like $12.8 million. The few under 500,000.
Right.
More of them under the sub-million market, but there's a good chunk farther up. And I basically broken it down into three kind of groups: those under $1 million, those between $1 million and $3 million, and stuff over $3 million. And over $3 million, I'm basically thinking it's the carriage tree, the luxury stuff.
Yeah.
Those numbers have. They're single digit numbers. Sales, they stayed the same. They really haven't changed that much.
Okay.
The stuff under $100 million, the numbers are up significantly, but they haven't quite doubled. Where the growth is really taking place is in between, where you've got, I think, the 2 to, looking up here, the $2 to $3 million mark. Last year there was one sale. This year there's 20. So you've got that kind of stuff going on. Part of it's prices being pushed up. Part of it, I just think there's a lot more demand than there was for that kind of stuff. So COVID is definitely driving some of this stuff. People are looking for sanctuary. They're looking for haven. They're looking for a place to stay.
Yeah.
They're looking to place in some cases for their kids, others to retire, just to get away from it. Some of it's work from home. People that are living in downtown Toronto condos, they're too small. They basically need some more space, and I think that's influencing real estate generally in this part of the world.
Yeah.
Well, most parts of the world. And then what also I think is happening now is due to COVID, due to some, especially the economic uncertainty stuff going on, I think there's more than a few people that are throwing in the towel. Those that were basically saying, hey, I was going to retire in 2 years, let me just advance my plan.
Yeah.
And I'm seeing I think a good chunk of that on the people that are buying these properties, because a lot of the people that are buying are either retirees or people that want to retire in the next 2 years. There's some, especially in the lower parts, that are working out of Realty or working out of Barrie or wherever, but a lot of people, this is like their final home before the condo or before the retirement home. So they've got that kind of stage of mind. So they're focusing on that. The supply is tight, but I think there's the moment. There's a yesterday morning or yesterday afternoon. I think I saw there's 39 active listings on there.
Yeah.
And there aren't a lot more popping up. There are like 2 or 3 in the last couple of weeks.
But are we seeing the same cyclical slowing that you would typically see this time of year anyway?
Yeah, I mean, there's definitely seasonality is a big factor.
For sure.
Right. It's typically waterfronts. May is typically the big month for waterfronts. People are listing them. Summer's usually rolls along pretty good. Last October was actually I think the best month of the whole year last year. So I'm optimistic the same kind of thing will take place this year. July was a really good month last year too. So there's some stuff happening, but so I think the normal seasonal stuff is going to play out. But what I'm seeing now is between now and the next 3 or 4 weeks, we might get into mid-November. It might push it. It might be that kind of market.
Right.
But once you get past that, there'll be a lot fewer sales. People that are buying waterfront, unless they're familiar with the property, in most cases they don't want to buy when there's snow on the ground, because they want to really know what it looks like, walk it, get a sense of it. Because it's more important with these things than other places, right?
Tough product to transact in the summer.
Yep. So I mean, this year basically April was dead. There's a few sales that are trickling on for March. The world was unfolding close to 2017 of kind of boom environment in the early part of the year, and then mid-March everything sort of shut down. April was really slow, and stuff started coming back again in May, and then since then things have been on fire.
Yeah.
What I am seeing though is there's a few some of the more recent listings are what I sort of call the opportunistic stuff, where people tried to sell it 2 years ago.
Yeah.
And they tried it for a while, couldn't sell it. And then they decide, no, now's the time. They're talked into it, or they decide themselves. But instead of just listing at the price that they didn't sell for before, or a bit more, they jacked it up 10, 15, 20%. Of course. Yeah. And I understand it, right? It's a hot market. Why not try it? But at the same time, I think a large number of these properties that are trying that stuff are either going to be forced to drop the price. I saw one drop the price $70,000 a couple of weeks ago. Yeah. A week or so ago. But they're either going to drop the prices the next couple of weeks, or they're just going to be, pulling off the market before Christmas.
Right.
That's what you're seeing in this space too, especially, in the mid sort of $2 to $3 million range. You're seeing a lot of people sort of traditionally trying stuff out. Yeah. They're ambitious. They have aggressive prices out there. And in many cases, they're willing to wait for long periods of time, months, sometimes years. It's not uncommon to see some of these people list 2 or 3 times. Right. I know one case out there that they just renewed they just canceled the listing and put it back on. They've been off and on since 2015. Right. And it's a nice house. I've been through there a couple of times. It could have sold. I had many conversations with the realtor, but it's just a little too far. There's just a couple $100,000 beyond what the market's willing to support. Yeah. So there's a few like that. On the other hand, there was one that's over in Ramera that popped up 2 days ago, sold firm within 2 days. But the unusual thing about it, it's unusual to sell that quickly in that firm. Usually stuff is out there, even hot stuff is usually out there for weeks. A week or two. It's usual for that kind of stuff to move quite that quickly. This one sold in 2 days, but it had also sold back in mid-August. Right. And so I don't know the entire backstory, but basically it was, they made $100 grand.
Yeah.
From buying in mid-August to what they sold it for, ignoring all your transaction costs, right? 150 grand. So that, I guess maybe there's some lifestyle changes or something, but they broke even a little bit, made a little bit of money off of it. I doubt they would have done that to make money because it wouldn't have been that shoot 'em investment. There's probably something going on there.
Right.
But it speaks to the hot market. It's still reasonably strong. There's not a ton of supply, especially some good looking stuff.
Yeah.
So I think things are going to keep rolling along for the next few weeks. So.
Okay, interesting. I'm curious to see how it all plays out. I would tend to agree because I think that, like, especially now, I've noticed even just in your sort of regular residential product that transaction is like, as Toronto starts to falter a little bit, you almost see like this renewed demand. Like Barrie especially is just insane. We had a couple buyers from agents at our office and myself, they were looking at products there, and like you described, everything's getting like crazy amounts of offers. Like
404 sales in September. The past 3 years we've done in the 200s. I think one of them went in the 300.
Right.
So it's double. And September's a good market usually, but it's not like that.
No.
But the interesting thing too about the September stuff there is that we had 3 months of record-setting prices, but we didn't set one in September.
Right.
So it dipped a little bit. It's the second best price in history. So there's more stuff happening.
Is it plateauing a little bit?
Yeah, I think it's plateauing a little bit. I think there's more stuff happening down market than it was before. So there's some mix issues going on.
Yeah, right. So yeah, okay. So there's a little bit of a skew.
But
there.
we're still seeing price increases in condos, right? Unlike sort of downtown Toronto and stuff.
What would be your sale to list price ratio growth in that same period of time? Just out of curiosity, because is it maybe just price discovery, like sellers are adjusting, right?
Yeah. I can't quote you an actual
Okay.
number. Look into that some more, but it's basically it is moving pretty well. And there's relatively tight inventory, more in certain spots than others. The higher end condos are still higher end. Here I'm basically saying anything over $500,000. They're a little slower.
Yeah.
But the other thing that's different about Barrie, and I think we're going to see this in sort of Guelph and some of the outlying stuff, is our rents are still up. So our rent increased 10%, whereas downtown Toronto in particular and some farther, I'm seeing some stories of some big drops coming.
Yeah. Yeah.
So
well, yeah. I mean, Toronto, like, it seems to already be coming off. I was down there doing some content with one of the agents I work with a couple of days ago. Was it yesterday? Yeah, yesterday morning actually. And we were just touring, like just trying to get an understanding for how much vacant product is down in these buildings, and it is wild. Like, it's the one of the buildings that we went through, like the concierge, we had to call the concierge to come show up because like they just aren't even there right now. This would be a student, like very much a student building, but still, like, it's a ghost town, and it's sad to see, right? Like, it's tough to say. Like, I know the government can do a lot in the macro to keep credit creation strong and keep that demand, but it's tough to do it and isolate it to something like that where there's really no way. Like, how do you possibly get everybody to come back and create this incentive, right?
Yeah.
So,
I mean, immigration's way down. It's starting to trickle back up a little bit.
When they tried to open it back up for the foreign students too, right?
Yeah, they're trying, but I mean, the student visa numbers are way down. I haven't seen August data yet. I don't think that's out, but August is a big month for those things. Yeah. But it's student visa. You got temporary workers. You got even refugee numbers are way down. Normal immigrants are way down. I mean, there's a lot of stuff that is impacting things here.
Yeah.
And I know the feds want to push this and get everything back, that part back to normal as soon as they can. But I just don't see a lot of people sort of jump on that bandwagon wanting to come to the country quickly, right?
Yeah.
Space. A lot of it's going to depend on what happens with the economy. I think there's a lot of shakeup come out in the post-secondary sector, probably around the world, but particularly in this country, in the States, where a lot of institutions that are really relying upon those international fees, they're not going to be there, at least not the same way. So there's going to have to be some soul searching on what they're going to do.
Yeah, the macro piece is really, really interesting to think about from there. I'm glad that I'm not the person that's tasked to solve those problems, but I mean, I think this is like where the Canadian government seems to be really putting a focus on affordable housing, which is a really good way to just stimulate demand, right? It's like, okay, if you can bring a bunch of units to the market as soon as possible that are affordable, like there's infinite demand, right? But the challenge then becomes you deal with the NIMBYism of like all these people being like, oh, you're putting an affordable housing building in my neighborhood or whatever. And I've always been a proponent that affordable housing is a good thing for a community, but a lot of people would disagree. It seems to be the general sentiment, which is,
I mean, I think a lot of people, sort of see their neighborhood change, and especially like a lot of people from here, from Barrie, come north. I mean, like me, they came north from the GTA, and they came to get away from congestion. They came to get away from crowds and stuff like that. Better lifestyle and stuff, as well as bigger house and value. But and then you see some of the stuff coming north, and the development. They're trying to do smarter development, and doing most of it's going to be, or maybe not most of it, a lot of the stuff is going to be on greenfield land right now. But you still hear stories from time to time. There's somebody that a couple of years back, I was at a city hall presentation, and one of the developers was looking to put up I think it was an 10-story building, and there were typical suburban homes. And one of the people that rose to speak was a father who basically said, yeah, I'm right next door to this thing. We have a pool. My teenage daughter's out there with her friends. You're going to be looking down.
Right.
And he said, yeah, well, that's just the way it is. And maybe we can do 6 stories instead of 10. And I understand that. So not surprisingly, they moved out 6 months later. Still hasn't been built. But you have those sorts of issues that are really personal to people, that have some stuff that, quite apart from the whole affordable housing, how do you deal with those kinds of things?
You don't. It's a natural course, right? Yeah.
People have talked about the Toronto exodus more recently. You heard the same sorts of stuff in New York and a bunch of things, other places related to COVID.
Yeah.
But what I haven't heard anybody talk about is sort of like the normal sort of normal access connected to development. We used to be, as mentioned, one of the fastest growing communities in the country back in 2006. Massive development went on back then. It also caused a whole bunch of people to leave. So that's showing up in some of the stats can't.
Right.
And not surprisingly, people are cashing out, making some good money back then, going to buy in the Midland and Aurelia or Angus or someplace else. But it's not just a one-way street. I mean, it's a cycle, and people get influenced and they keep moving on, right? And I don't know how far I can go. I can't see myself moving to Parry Sound, but right. The Midland, Aurelia kind of stuff would probably be the next logical step.
Yeah.
Somebody, a lot of people on. I
right.
know.
And when you think about like the way that demand is going right now, especially with the waterfront stuff. Because I know you and I are interested in doing a little bit further research on how that's going to progress. How do you see that all playing out in the next 6 to 12 months, 24, whatever? Like, where's this story going from your perspective? This massive increase in demand, because I think you and I probably are in touch with two different ends of the market that are consuming that product, right? Like you're describing a lot of boomers maybe potentially in the advancing their retirement plans, right, as an example, or if they're working from home, moving to the place that they were thinking now rather than in 2 to 5 years. But whereas for me, like I see a little bit more of and I would say Georgina, like Keswick especially, is you get a little bit more of just that like regular consumption,
right? Just
because of the product, like we have tiny little frontages. It'd be like your Innisfil stuff, your old cottages.
Yeah.
How do you see this all like playing out in the next little bit? Like, do you? I think from the 4-season dwellings that you're describing, you're seeing a lot of transaction. I don't know if there's as much of a liquidity issue because they're homes, but when I think about cottages and stuff, it does worry me a little bit there.
But I could see that with cottages. I mean, that would you think that might be the first domino to fall, that people need money. If they can't refinance, if they can't do it, they want to cash out and get the money and reorganize their lives. I guess a lot of the question is the cottage owners, how many of those are people that are in their sort of vulnerable situations right And a lot of that's hard to say because I think we've got a lot, there's airline layoffs and all kinds of stuff like that are going on. I had a colleague who basically said earlier in the year that she had, I think, 4 people that she was looking at buying homes for that were all connected to the airline industry. That was all on hold because all the stuff going on. I don't see that particular industry getting better anytime soon. We're probably 2 or 3 years away from that one working out. Probably layoffs coming from the major banks and a lot of other major companies. So people that are in relatively secure jobs, there's some stuff coming down the pipe. But if you're closer to retirement, if you're in a senior kind of spot, I'm not saying you're not affected by recession and all the turmoil and stuff like that, but you are, it's easier to get financing. It might have lots of equity built up. There's lots of stuff that can happen. The cottages, the smaller stuff, for people that aren't in that bracket, where it's just a recreational place where they're taking the kids on the weekend, and it's not a haven. It's not some place where it's an alternative. Yeah, I could definitely see some stuff, starting to trickle down there, sort of the lower mid market. I don't know a ton about the whole ski market. We talked a little bit about that stuff offline, but I think your theory is the same sort of thing could affect you. Here's some stuff where people don't necessarily need to go there, and it's not a haven. It's a recreational place that is discretionary, basically. So maybe there will be some drops coming down. Monitoring that kind of stuff in the future, makes sense. I think what we're basically saying, is how long is COVID going to last? How deep it's going to get? Are we going to have a second wave? Or is this going to force a second round of people to basically exit?
Right.
Right. Support of the federal government programs are particularly going to be how's the industry going to react?
Yeah.
Work from home. I've been hearing work from home versions of the story for 40 years now, and it seems to go in waves. The technology, except for maybe at the startup today, but the technology is mostly there that wasn't there in the past. That it makes it realistic for a lot of people, a lot easier to work.
Yeah.
But at the same time, I think there's, especially with larger corporations, there's the need to be seen, and there's the need for to see that someone's at their desk. There's the desire to do lunch and to network, all those sorts of things that just don't work the same way. So I think there is some people who would be really anxious to get back to the office if they could.
Yeah, for sure.
And others, live in the dream. So I think there'll be more of this, but not. I think there'll be less of this a year from now than there is today.
Yeah.
But the other big factor is, of course, demographics. I think we're getting to the tail end of the baby boom.
Yeah.
Assuming people still have some retirement money built up, or the opportunities there, or equity in the houses and stuff like that, they'll be looking to advance their retirement plans and getting on with life. So it's going to continue. I think there will be a drive for people to move out of the cities. I don't see that changing that much in the next few years. I think there's some ongoing momentum build up. So, not sure I'm answering your question, but
no, it does actually, and it kind of prompts an interesting other thing to explore, which is like when and it's more on the qualitative side. So obviously, anything that we'll discuss about this will be pretty anecdotal. But when you are discussing with somebody, they say, "Okay, I want to buy a waterfront property in Barrie because I know I'm going to work from home a lot." Like, is somebody choosing a Barrie over, let's say, a Georgina or an Innisfil? Like, what seem to be the push and pull factors that start to come into play in that decision-making process? Is it proximity to the train? So like if they're in Barrie, the 2 or 3 days they do have to go into the office, maybe in the future, they can go take a GO train downtown rather than, being in Georgina where they got to take the highway to East Gwillimbury or drive all the way. Like, is that what?
Barrie's probably not the best example. Barrie's a pretty limited waterfront. Half of it's park, and you're talking higher end stuff, so you're really talking a different kind of animal. But if you look at like Oro Medante, or even over in Severn, you're 15 minutes away from, depending where it is, from the GO train station.
Yeah.
But you're in a long haul to get down.
Yeah.
Talking and it's more comfortable. You get a seat, all the rest of it, but you are an hour and a half, hour 45 minutes to Union Station.
Yeah.
And that's just scheduled time, right? It's probably faster these days because the last time I looked, a week ago or so, the GO transit traffic was down 20% of normal. So there's probably not a lot of people on the trains, and there's maybe questions about how sustainable some of the routes are going to be if this goes on for much longer.
Yeah.
But I think I think the work from home thing is, if people can get set up to that and they're comfortable, their company's going to continue to allow them, or they have some other alternative, they can live pretty well anywhere where there's high speed access, right? Where there's good quality stuff with it. So I think in the Georgina, you're right. I mean, you're not that far from some of the train stations there, maybe a little farther away in some parts, but
are people caring more about, like, they want to live in, like, what would be, what maybe not most people would call an urban area, like when they talk about the city of Toronto, but what the Places to Grow Act or the planning world would call an urban area? Like, they want to be, because like Georgina is a good example. I'm in an office right now at a main intersection. I can see all of your national tenants, and if I were to walk 500 meters, I could go to a waterfront home. So
right.
But that's one side of the water on Cooks Bay. Like, Innisfil's a lot more vast, right? The distance between the highway, and so there's a lot of space between the waterfront world. Whereas Barrie, I guess, like you said, there isn't a ton of product, but you get that 100,000 plus city world, right? You have the downtown, so it's for people, it's a more natural transition from a downtown Toronto to a downtown Barrie, as an example.
Well,
Does that matter?
Yeah, I agree with that. And there's more sort of opportunities. Pre-COVID, there's more stuff for nightlife and restaurants and stuff, on more limited scale than you'd see in the city. So those sorts of things that are appealing to people, quite apart from waterfront, are here more than they would be 10 minutes north or 15 minutes north. But a lot of the places a lot of the communities that I've looked at are smaller communities that are, a few hundred homes. In some cases, only on the water. There's nobody across the street. Most of them, there are normal little places, but they're also not that far. They're 15 minutes away from a Barrie, or there's Costco's in Aurelia. There's stuff like that just isn't that far away. You're not that remote from some of the main stuff. There's hospitals and whatever you need to get to.
Yeah.
So I think people are doing it for the value. They're doing it for the lifestyle. I think most of the people that are looking to recreation fits into something, but a lot of it, I think, is probably just the romance of having that water at your doorstep, and some of it's great. I mean, I've always wanted to live in the water. I haven't done it, managed to pull it off yet, but for me, there's also the desire to have a little bit of privacy on that. So I don't particularly want to be in a busy bay where there's lots of people out there on weekends and there's views or skidoos in the winter. So I think people, if they're looking to buy waterfront, they need to get a good sense of what it is that they truly value.
Yeah, Keswick could be a good example of what you just described. Like, I think a lot of people are buying up here not realizing that they're basically a skidoo trail in the winter.
Yeah.
Which is fine. Like, I grew up on Cooks Bay, so I'm quite familiar with it. But a lot of
you need to understand what you're getting into, right?
Yeah.
You need to with expectation. Where their fishing huts are, I mean, that's usually not that big of an issue, but sometimes they are, right?
Yeah. So moving forward, like, what are you paying the most attention to in the market to get an understanding for the health and I don't know, I mean, trends, like whether or not when you're advising clients, like what metrics are you evaluating sort of thoroughly to get a good understanding?
I mean, obviously the unit sales, the prices, average. I don't like averages; they're very distorting, but they're pretty common and relatively easy to pull together. You're looking at the different communities. As far as one of the things I don't think I mentioned there, but I also when I did this research, I also picked up private sales. So I went through 3 different real estate cross-reference and stuff, and also looked at some internet to pull it up. And there are only, I think, 29 private sales, and that's a lot of work to sort of pull that stuff together. But I've got a much better sense of where the market's been the last 2 years. The comprehensive is important. Days on market doesn't mean that much for most of the stuff. I mean, people like to quote it, but it is part of the world. Even Barrie, which is much more closer to sort of Toronto market, some of this stuff, people canceling list all the time, and tends to distort some of those things. So I don't spend a lot of time looking at that.
It's funny, like we got a lot of, I'm sure you've seen this in your market too. There's a couple of agents who they'll do a relist the day before they sell something firm, right? So that
I've seen that too. It's strange.
So, okay. Is there anything else you wanted to add to the conversation before we wrap up? I just like you've been pretty good at being exhaustive about a lot of the things that are important to a lot of people when thinking about waterfront. So I appreciate that. But is there anything that, from your perspective, we're missing here?
No. I think the key thing, this right now, people need to really keep their whoever they're working with, they need to have somebody that's tied really close to what's going on, because we're at a point of change here. I think there's a seasonal issue going on over the next 3 or 4 weeks, where I'm expecting there's going to be some prices start to drop, maybe as much as they maybe should be.
Right.
But then there's longer term stuff with the economy, with COVID, which a whole lifestyle, demographics, things like that. So people shouldn't go in blind and think, well, houses have always sold quickly in my street, so they always will, and I don't have to do much. Find somebody that is good looking, and whatever their choice is to pick a realtor. Like they want someone who's really knowledgeable.
Yeah, I would agree. I think it's becoming like, well, the thing is, it's orders of magnitude now, right? Like maybe like a couple years ago you bought, 2017 would be an outlier, but in the past, let's say 2018, 2019, you bought a house from somebody who didn't really know what they were doing. You're probably okay today, and maybe it would have cost you 25 grand to 50 grand on the day that you purchased it. But now it's like there's real downside risk that's apparent. Like you can't look at the economy and be like, yeah, I'm 100% certain that everything is going to be okay and prices are just going to go up ad nauseum, and I'll have 100K equity in this property in 2 years. Like it's not like that anymore. So this is why, right? Like I've been on social media talking about downside risk for 2, 3, 4 years, and people are always like, oh, you're so bearish, and I'm like, I'm not really, actually. I really believe in real estate. I purchased more real estate than most of my clients, but I think risk is a very important thing to be aware of, and right now the state of the world demands that people pay attention to that, right?
We're at very early days of what I think is the biggest change since World War II. There's so much stuff going on right now. And a lot of it we just can't figure out. You can just look at what all the economists and everybody were talking about back in March and April.
Yeah.
CMHC still got their negative forecast.
Yeah.
There's definitely going to be some downturn stuff, but a lot of people just didn't see the massive stimulus, the unprecedented mortgage deferrals, all kinds of stuff happening. How much more of this will go and how effective it will be is the $1 billion question here, right?
It's going to depend on the Fed, right? Like, they just announced all this infrastructure spending. The question is that aimed at, because you think about the guys who are building high rise in Toronto right now, because this is really the problem that they need to solve as soon as possible. If you're a company who can build high rise in Toronto, you can also build a bridge, you can also build a road, you can also build a subway station or whatever it is. So to me, infrastructure makes sense because they can tighten this labor scarcity in that infrastructure grade. And now all of a sudden they can protect the cost structure a little bit while stimulating the jobs market. The question then becomes, like, can we afford to continue doing this liquidity BS where they're just basically pumping money into the economy? Like something like 20% of all Canadian dollars in circulation were made this year, right? So it's like, this isn't, they're either we're kicking the can down the road or the global economy is it's going to be completely, like you just described, it's completely rewritten, right? Like the rules are completely done, and we have to start from scratch and figure something else out. And this is
I think that's where we're going.
There's
going to be new rules. Like it's going to be a new regime. This was a few years back, I think it was, that I heard that some of the bonds the UK had from, I'm not sure, the UK back then from the Napoleonic Wars are just paying off.
Yeah.
So some debt is out there for a very, very long time.
Yeah.
People have got into negative interest rates in Europe and Japan and a few other places. In real terms, I think we've probably been negative for a while. I don't think we're going to go there, but I think we're going to get close. And there's implications for that. So it's
the problem there. The problem there as well is like, you can't. The bond piece has interrupted Darwinism, right? Like, it's not like the natural selection of business. Like, I understand that for certain things you got to do it. Airlines would be a good example, right? Like, these are companies that are too big. They would leave too big of a hole torn in the economy. But like, if you think about a bailout of like Ruth's Chris Steakhouse as an example, right, in the U.S., which was one of the first ones to happen. I think about it and I'm like, that's not like, I get that there's a lot of employment associated with it, et cetera. But like, at a certain point, we have to let natural selection run its course in the.
I agree. Well, I mean, 20% of small businesses go out of business every year, and we're probably propped up a few of them, right?
Yeah, for sure. So
there's a bunch of them died. I mean, the problem is, you talk about Darwinism, like, it is the larger companies that made out better than the small ones.
This is the challenge, and this is why I've just really recently started focusing more on the local story of what we're talking about. Like, I'm going to be speaking with a lot of local realtors, but I'm also going to be speaking with a lot of local business people to get an understanding, because I think a lot of consumers don't really know what they went through in COVID and what they're about to go through, and or like how we can properly work together to help them through this stuff, right?
Yeah, agree.
So I'm interested to see how the whole thing plays out anyway. Well, I'd love to continue this discussion. Like, maybe you and I can just keep looking at the data and maybe touch base towards the end of the year and see how the final quarter shaped up on paper and revisit and see if there's any conclusions. Because I think I'm obviously a little bit more bearish on how things could turn out.
Well, for me, a lot of this stuff is going to be, where are we in mid-February?
Yeah.
Late February. I knew there was a thing going on in 2017 and early February, and some crazy stuff started happening.
Yeah.
And I knew there was an issue with COVID back in January, but like a lot of people, you kind of thought it might have just, hopefully, would be just at that point stick to China.
Yeah.
But that sort of spread. So I mean, I think February we will know what kind of spring market we're going to have.
For sure. Interesting. Okay. Well,
all right.
I appreciate
talking to you.
Yeah, I appreciate your time on it and your insight. Honestly, I'll send you a link over this when it's available. It should be on YouTube sometime this week.
Okay, excellent. Thank you.
Ken, good luck out there. Enjoy the beautiful weather.
Thanks. You too.
Thanks. Bye.